Hey guys, Dave Keller here with Market Misbehavior. Hope you're all doing well. Today, we're going to talk about head and shoulders tops. We're going to look at a particular stock, Peloton, talk about the distribution pattern that we've seen in Peloton as it's rotated from a cyclical uptrend to more of a cyclical downtrend. We'll talk about how that evolution has actually played out, what particular levels you look for to confirm what's called a head and shoulders top, and what that might mean for the stock going forward. So today, we're talking about head and shoulders tops. So the technical analysis toolkit involves a lot of different analytical strategies dealing with price behavior. It's all about how price is a reflection of investor sentiment. Fear, greed, desperation, euphoria, all of those emotional drivers of buy and sell decisions are manifested in stock prices, or at least that's what the theory is. So we have a series of price patterns which tell us, or which anticipate, what might come next on the stock based on the patterns leading up until the given moment that you analyze things. Head and shoulders tops and head and shoulders bottoms, or an inverted head and shoulders, tend to grab headlines. They tend to be talked about because it's kind of an interesting visual. It tends to be a compelling visual representation of distribution or of accumulation. But what does it actually mean? How do we use it? And how can we apply it to a particular example? Before we get to the chart of Peloton, I just want to remind you, if you're into this sort of thing, looking at visualizing data using charts, focusing on investor behavior and decision making through the lens of technical analysis, I hope you'll subscribe to my channel. It'd be great to have you along this journey with us. Also, if you appreciate the video, we'd appreciate a like, and thanks so much for doing so. Also, put a comment below the video. You think the next 10 to 15% move on Peloton is higher or lower from its current point? Let me know what you think. Let's get to the chart. All right, so here we're looking at a chart of Peloton Interactive PTON. Now, this is obviously a company that's been in the headlines a lot recently because it's a pretty widely followed name. Really, through the course of 2020, sort of exemplified the work from home trade. We're no longer going to the gym. We're all buying Pelotons, putting them in our house because that's where we're going to be forever. And the price as a result continues to push higher and higher and higher. That continued really through September, October. Again, another push higher into December and January. Now, what's happened with the S&P 500 in 2021 is that the S&P has actually continued to make new highs, but you can see how Peloton has actually gone lower. And the illustration of that is best indicated by the relative strength at the bottom. This is the relative performance of Peloton versus the S&P 500. You can see it's transitioned from being in an uptrend, outperforming the S&P through the end of last year, beginning of this year, to underperforming. And this line going down means Peloton's underperforming the S&P 500. And that's what happens when a stock is going down and the market itself is going higher. You're underperforming the market. It's making a new relative low for the last 6 months or so this week. So when we talk about price behavior, I often talk about higher highs and higher lows being an uptrend. That comes from Charles Dow and what's called Dow theory. This was early 20th century. He created a series of tools to quantify price trends, and he stated that an uptrend is a series of higher highs and higher lows. So Peloton through much of 2020 is in a pretty classic uptrend. The highs keep getting higher. When the stock pulls back, the lows don't go lower than the previous swing low, right? You keep making higher highs and higher lows. Look at how all of that has really changed or started to change here in 2021. Now, all of a sudden, we're no longer making new highs. Every high is actually a little lower than the previous one. Now, the question is, do we make a new low? Now, in the short term, we've done that a little bit, right? We found support here. We bounced off of a low in February, continued to make a new low. Now, the question is, do we make it, if you zoom out a little bit, do we make it below that November low? You can see that the November low and the March low, the early March low, are right about at the same level, right around $95, just below that. It's actually around 94 and change, but that's about the level that we're at. So as long as we remain above that level, we'll call that the neckline, then overall, the stock is still not managing to make a lower low on the longer term time frame. It's actually holding up okay. So we could bounce off of that 95 level, revert back to an uptrend, and this would make sort of logical sense based on traditional support and resistance. It's also worth noting, by the way, that that low around 95 also lines up with this high from September, right? So the new high in September pulled back. We broke out of that, then we retested that level. And breakout levels becoming levels of support is a pretty classic, tried and true technical approach. So Number one, Peloton is no longer making new highs. We've seen that with a lower high here in April. Number two, it's approaching this key level of support around 95. Third, we can see some other qualifying things. Most recently, Peloton rallied to a descending 50-day moving average. In an uptrend, often stocks will pull back to an ascending 50-day moving average. That's often a nice launching point to the next leg higher. We can see the opposite in a downtrend. A lot of times stocks will trade up to their 50-day moving average or their 10-week moving average and rotate lower. So that's strike number one. The stock's back below its 200-day moving average this week. It's done that a couple times. The past couple times it's bounced up, so that's something to watch. But overall, in general, stocks being below their 200-day is less ideal than them being above their 100-day, above their 200-day. So that's strike number two. Strike number three, which has not quite happened yet, is this trend line taking the low from March and the low from early March and the low from late March. You can see we're right about at that point. So, potentially we break down through there. Finally, the RSI most recently petered out around 60. And what you'll notice is when a stock is in an uptrend, like this chunk, sort of the second half of 2020 into the beginning of this year, you can see that the RSI becomes overbought when the stock moves higher. When the stock pulls back, it rarely gets below RSI 40. That's more of a support level in a bullish phase. You can see how that changed here in late February where the stock sold off and RSI did not hold at 40. It actually got all the way down to the oversold level. On the rally, the subsequent rally into April, it actually found resistance at RSI 60, which again, now we're sort of overall, the entire range of the RSI has moved down. It's now more in a bearish phase. So overall, it's starting to show some signs of heaviness, signs of weakness. The question now is, does it follow through? So we've seen a potential pattern. The question is, do we follow through and confirm further downside potential? So what you cannot do based on the rules of technical analysis, you cannot call this a head and shoulders top yet, even though a lot of people already have, and a lot of people have speculated it is a head and shoulders top. It by definition is not until you break the neckline, that support line that I talked about, 95 or so, 94, 95, which is the low from November and the low from March. That's called the neckline. Until you violate that support level, this is not yet a head and shoulders pattern. A head and shoulders pattern actually can be declared that way when you actually confirm it by breaking that catalyst, that trigger that I mentioned earlier. So until we break 95, we can't call that a head and shoulders, sort of a head and shoulders like pattern. It puts a potential head and shoulders pattern. A break below 95 would confirm it. So the other thing to notice is not only is it a head and shoulders top potentially, and that is because it's literally called that because it looks like a head and two shoulders. You have a high surrounded by two lower highs. Often the two lower highs will be around the same price level, which we're kind of getting here. They tend to have a stable neckline, a support level, and the interim lows between the head and the two shoulders. That's what we've connected with the blue dotted line here. That's the level of 95 that we've talked about. So besides being a head and shoulders top, it also looks almost like a bear flag. And a bear flag pattern is basically when you have a sell-off, then you have a parallel trend against that sell-off. So you have higher highs and higher lows in the short term. So you can see that the lows from March and April, you can draw a parallel line up here and it's almost identical in terms of the higher lows there. If we break that pattern, meaning if we go below this purple trend line, that would indicate much further lows as well. So we are very, very close. A break below around 105 or so would be the first signal of the bear flag. A break below 95, further support would indicate further price weakness. So the question is, if that happens, what next? Here's what I would look at. Number one, you can see we've laid out the Fibonacci retracements, taking the March 2020 low and the January 2021 high. 38.2% of the way down was pretty much where we bounced off of in early February, which made sense. We then went down to the 50% retracement level, which is the middle line here. We have bounced off of that. If we break that, the next logical point is the final Fibonacci level, the 61.8% level, which is around 76.30. So that would be the next downside objective. Now, all those price patterns that I talked about, the bear flag, for example, the head and shoulders top, all have measurement techniques as well. Let's look at that bear flag one to start with. What we do is we look at, where is it? Here we go, percent change. We can take the percent change from the high to sort of the beginning of that pattern. We'll call that about 33%. We can then say, all right, let's say we break down here. What would be another 38% from there? Oh, sorry, 33%, excuse me. It's about there, about $70 a share, right? So if I take the distance from the high to the beginning of that flag pattern here and say a breakdown would give you a parallel sell-off to the lead into the pattern. That takes you down to around $70. The other thing you can do, if we get rid of these two, the other thing we can do is actually look at the head and shoulders top and do a similar type of thing. This is going to give us a much more negative pattern, so brace yourself. If we take the high to the neckline, which is around 45%, and we say a break of the neckline goes a similar distance down, that puts us around there, which is around $52 a share. So depending on what pattern you decide is the most important pattern to pay attention to, you get an objective anywhere from 70 down to $52 a share. Based on what's happened and based on the relationship of the Fibonacci retracements, 76 seems like a very clear objective based on how it's traded off of these Fibonacci support levels before. So that'd be the next level I would look at. The support below there would be 70, and that would be basically a parallel move based on that bear flag pattern. If we would break 70, then I think this objective of 52 comes into play. But again, we have a lot to do between now and then before that would happen. So overall, that is what a head and shoulders top looks like. And to be very clear, you can't really call it a head and shoulders top until that neckline is violated. So if you see anywhere where they talk about Peloton being a head and shoulders, that is incorrect according to the rules of technical analysis. Until you break $95 a share, that would confirm it as a head and shoulders top and kick in some of these negative price objectives that we've talked about. Again, for me, calling something a head and shoulders top is less important than just looking at the trend in the highs and the lows. This stock has rotated from an uptrend to a downtrend, and now we're nearing those triggers that would indicate much further potential downside loss. What if we're wrong? What if Peloton is not distributing any further than this and it starts to rotate higher? I've often said, when you're learning to fly an airplane, they teach you to you develop your emergency plan when things are great. Don't wait until things are really bad to figure out what to do in an emergency. Set it up right up front. And that's why when you make a trade or have a call or a position, always have your exit strategy in place immediately. So when things are good, you have your exit plan in mind. So let's assume that Peloton does not go lower from here. And what happens if it goes higher? So first things first, the 50-day moving average, right? We're below a declining 50-day moving average. I think if the price goes back above the 50-day, that would negate some of the negative impressions that we've had, negate some of the downside targets, and indicate that Peloton is more in a consolidation phase than a distribution phase. Step two would be a break above the swing high. So break above around 125, which would take it above the highs from early April. If we are able to get back above 125, again, that would negate this negative head and shoulders like pattern and indicate potential consolidation, if not further upside. Overall, what you have to remember is if this neckline is not broken, those real negative signals don't really kick in. And so again, having lines in the sand, if we break it, the negative plan or the bearish plan goes in place. If we don't break it, what are some levels that we will maybe look for as an indication that things are better? So step one, I would see a break above the 50-day as telling me that the bearish case is incorrect. Step two, you break above 125, which would be the swing highs from April. That would convince me that the bearish case is probably no longer valid. Finally, an RSI back above 60 would indicate that the RSI is back in bullish range as opposed to bearish range. Those three things would tell me to not be quite as negative on the chart of Peloton. At this point, though, I'm seeing more signs of distribution than not. And I always think of the path of least resistance. On the chart of Peloton, it certainly seems for the near term, the path of least resistance is lower. So that's the take on Peloton using the tools of the technical analysis toolkit, particularly head and shoulders patterns, head and shoulders tops, bear flags, Fibonacci retracements. We hit on a little of everything, but the real point was to illustrate what a head and shoulders top starts to look like, reminding you of the importance of focusing on that neckline. And that's why Peloton around 95 is a really important price level to pay attention to. I hope you found this discussion helpful as we talk through some of the components of the technical toolkit and relate it to investor behavior and price action. If this sort of thinking about investor decision-making using the lens of technical analysis is important to you, I hope you'll subscribe to my channel. I'd love to have you along the ride with us. Also, if you like this, please give us a thumbs up below. I'd appreciate that very much as well. Finally, in the comments below, do you think, based on what we talked about in this video, that the next 10% move in Peloton will be higher or lower? Tell me what you think and why. From everyone here at Misbehavior, I'm Dave Keller. Be safe, be well. Talk to you soon.